I'll just start off with the strategy toolbox. Introduce that. It's a structured framework designed to help traders build and evaluate their own systems using the SharkIndicator products together with our library and premium suite tools. So as with the indicator suites, we have two sections, the library and premium toolbox. And in the library section here, you'll see practical examples based on what we've featured in the Spotlight newsletter previously and also on the LizardIndicators blog. And in this presentation, we'll have a look at how to implement crossovers with a trailing stop using Bloodhound and take a hands-on approach on how to turn a simple trading idea into a clear and testable setup. So just to give you a clear overview of what to expect from each toolbox post, you'll have a quick summary of what's discussed, a video tutorial on how to implement the concept. You have a download section with pre-built templates, and there's also background materials on the tools used for each example. And as of now, we have between 15 and 20 posts demonstrating different ways on how to implement our indicators with the Shark tools. So as I said, the overall idea here is to give you a framework to turn your trading ideas into a rule-based approach. So just to elaborate a little bit more what we mean by that, it's about defining a clear and objective set of rules for when and how to trade. So every setup has a set of specific conditions that have to be met before a signal can trigger. So that will take emotions and guesswork out of the equation. And instead, the goal is to determine whether a setup really has a statistical edge before you ever put your hard-earned capital at risk. So we follow a five-step process to do this, starting with an idea or an observation. Can be a sequence of events that you see repeating itself that forecast a reaction in the market, or at least it looks that way. And based on that, you can formulate a hypothesis. For example, if a fast-moving cross above a slow-moving average, you would expect the market to go up in the near future. So again, the core principle is to define these mechanical rules that remove any emotion from your decision-making process. And because the rules are objective, they are applied and tested consistently. And you can do that across different instruments and market conditions. And oftentimes you'll be able to go back and forth between the original idea and hypothesis, optimizing based on fresh observation that you've done, adding filters and finding a trade management approach that makes sense for you. Of course, the goal here is eventually to verify or reject the hypothesis that you set out to verify. So finally, there is nothing that ever stays the same in the markets, which is what makes them so interesting and fascinating. So important here when we're talking about statistical edges, we want to have a process for monitoring performance going forward. And that is to make sure that the model remains sound in the future and to have a framework in place to detect if and when it deviates from what you've seen in the historical data. So in the next few slides, we'll go over a simple idea using a fast versus slow moving average crossover to predict where the market is headed next, and then use a trailing stop to optimize exits. And we'll go through this 5-step process along the way, and at the same time throw in a few examples on how Bloodhound can help you translate a trading idea into a objective and testable system. So the moving average crossover observation is a good starting point because it can easily be used to spot the current momentum and trend bias. Typically have a bullish setup if the fast cross above the slow moving average, whereas the cross to the downside will indicate a bearish scenario. And setting this up with the Bloodhound is very easy by using the visual programming tools. You can just define which moving average indicator to use, set the fast versus slow requirements, and voila, you've identified the crossovers as you see here. But if you only use those, there will be many false signals. So you see the short signals here are not particularly good. So probably a good idea to implement a trend filter to condition the crossovers to go with the trend. And one way of doing that is to align them with the slow moving average slope. So if the slope is pointing upwards, you can take bullish signals, and at that point, the bearish setups will be blocked. And as you see, that simple condition filtered out most of the noise signals here, making sure that we only take crossovers that align with the current trend. Again, setting this up with the Bloodhound is super easy. There's no programming required. You grab the slope solver, define the slow moving average, and you've defined the trend bias. So once it's moving upwards, you'll have long output. When it's pointing downwards, you'll have short output. But for trend entries, you do want to pay attention to the price action when the setup plots. I'm sure you've heard the saying, if a trend is obvious, you're too late. And we should generally be careful with setups that plot on wide bars. There's a high probability that the market has overextended and may have a counter reaction retracing immediately after those wide range bars. And with Bloodhound, you can easily exclude those as well by simply requiring the signals to be below a certain range size, then using the bar range solver. So that's just a quick overview of what you can do with Bloodhound, setting up a couple of simple rules. If you're not familiar with the software, it's really easy to use. And the real challenge, in my experience with working with my own clients and Shark clients for the past 10 years or so, is this process that we're talking about, putting a organized workflow. And so that's what we're doing with the strategy toolbox. So you'll probably make a few new observations from your original idea, leading you to modify or add some signal requirements, as we've seen here. Additionally here, it's always good to have a fixed time window for your trading routine. And so you probably want to add a time filter for that. So if you trade between 8 and 10 in the morning, that should, of course, be a setup requirement. So again, you typically go back and forth between observation and hypothesis, making these adjustments along the way until you have something that makes sense for your scenario. So you're thinking in terms of setups and triggers here, there has to be a confluence of conditions to generate entry signals. You can only have a signal when all the criteria are met. So we went over the slow fast moving average cross, the slope of the slow moving average, the bar length, and then the time filter requirement. And only when all of those align can the system trigger a signal. So the next step is then to confirm whether the setup has a statistical edge. And your first thoughts might be to run a backtest just using a 1-to-2 or 1-to-3 risk reward ratio, using fixed profit target and stop loss settings. But I recommend starting with the timed exit instead. And that is because you generally want to establish a cause and effect relationship between your signal prediction and what happened immediately afterwards. So for example, you can set a automated exit at 5 or 10 or 15 bars, automatically closing the trade after that time. And in my experience, that is the easiest way to find out if your setup can predict market moves. So this is a backtest report for a 5-minute NASDAQ chart generated by NinjaTrader's strategy analyzer using a timed exit after 5 bars. So you've basically just reversed the position after 5 bars, telling the system to exit at that time. And we see here a average win of a bit more than 3 points over 103 trades, a profit factor of 1.45, and trading here about every second day. Oh, of course, it's way too early to tell whether this is just a fluke or a coincidence. Just to show you a starting point for the process of verifying a trading setup. But I think it's never wrong to start off with something that shows predictive value like this. Again, we're looking for a cause and effect relationship between the signal and what followed in the market immediately afterwards. So for every signal that's triggered, then you can say, well, the market moved on average X points the next 3, 5, or 10 bars. And if there is a positive correlation between your signal and the market move, you can then continue with optimization and look for further ways to improve the performance here. There is a number of ways to optimize, and when I started out some 15 years ago, I was very focused on the indicator values themselves. For example, varying the look-back period for the short and the slow-moving averages until I had a perfectly back-tested equity curve. That's certainly not the way to go. So over time, the focus shifted more towards trade management. And the starting point would then be to return to this test of how it responds to a 1-to-2 or 1-to-3 risk reward ratio using a fixed profit target and stop loss. So you can use fixed tick thresholds or a range multiple from the entry price. If you run portfolio back tests, keep in mind that tick sizes vary significantly between instruments, and also that a fixed tick setting will not account for changes in market volatility. And I certainly want to factor that in when testing profit target and stop loss levels. Produces more accurate data on how the setup performed in different market conditions. The average number of trades per day, the average risk and profit per trade. And with that information, you can then make better money management decisions, choosing between a single lot, multiple lots, use a break-even trigger, or a trailing stop. And case in point, our strategy toolbox post on the Ligo, Alma, moving average crossovers. We focus also on the Shander crawl stop, looking at that to see if a trailing stop can limit the maximum possible loss without affecting your max possible gain. And that approach is, of course, most interesting if you go with 2 or more lots. So you could set a fixed profit target for the first contract, letting the second run for as long as the trailing stop permits. Just keep in mind that also these types of optimization measures can lead to tainted backtest results. So it's a generally good idea to include out-of-sample data in your evaluation. Typically, you don't want to use the entire data set. Instead, reserve the first 50 or 80% for optimization and then leave the remaining portion untouched. So for the backtest report we looked at a few slides ago here, it ran until mid-June. And so if you were running a out-of-sample report here, that could run until mid-August. And then you can evaluate how the out-of-sample data compares to the optimized backtest results. That is certainly a more reliable approach than just a simple backtest in sample. But a common pitfall is testing and retesting on the same out-of-sample data, effectively turning that out-of-sample data to in-sample data. So a better approach is what's known as walk-forward testing. That creates a more representative out-of-sample data set by repeatedly shifting the optimization and testing windows forward in time. Of course, you can also taint that by repeated testing, but I think it provides a much stronger basis for evaluating a strategy's robustness. So especially how it performs during different market regimes, volatility environments, and trend conditions. And once you're ready to go live, you'll want to keep in mind that markets evolve. They are neither strictly efficient nor inefficient. They adapt as market participants learn and change their behavior. So that's what's called adaptive market theory. And advances in tools, data feeds, high-frequency algorithms have reshaped the landscape, that's for sure. And patterns and setups are exploited and arbitraged way much faster than they used to. So it is our job to detect when a setup is failing. One method is to compare the current performance to the historical expectations. So you have a historical drawdown, what was that worst case scenario? And one approach is then to stop trading if your setup in live trading reaches that historical drawdown threshold. But there is a alternative and more dynamic approach to that. You can, for example, use a equity line crossover to decide when to stop or restart a system. So if you use a 15 versus 30-day moving average of the equity curve and stop trading when the 15-day average drops below the 30-day average, that reduces risk more efficiently than the simple drawdown threshold, I think. And it also provides a built-in reactivation signal. So trading resumes once the 15-day average crosses back above the 30-day average equity line. Okay, that's a quick overview of what rule-based trading is all about. You're taking an idea or observation, turning it into a hypothesis, and testing it on historical data. That will show you what works, what doesn't, and how to refine the rules. Of course, as mentioned, a common mistake is believing that tweaking the rules in order to improve your backtest will make you more profitable in live markets. It will not. It will typically lead to overfitting and failure in live markets because those tweaks that you made were based on known in-sample data, ignoring the realities of the changing market regimes. So I think the real edge is more of a understanding of why and when to apply a setup, when to stop trading it. It's not talked about a whole lot. The skill and the knowledge of managing strategies and setups basically outweighs the process of building them, in my opinion. And so that's what we've done with the strategy toolbox. We've designed it to help you master a structured process, giving you the tools you need to identify new ideas, new setups to stay ahead. So to round things off, let's have a look at what the lizard approach is all about. Most of the time, looks like these guys are just sitting around basking in the sun and not doing much, but they really have a sharp eye for what's going around them. And instead of chasing down their prey, they sit patiently listening and looking and waiting for a moment when there is an opportunity to grab what's right in front of them. And that's sort of the idea behind rule-based trading. You can create a clear and robust strategy that you understand and can execute on because you know the statistical probabilities. And if there's no edge, you hold on to your cash and do nothing. And that's pretty much how Jim Rogers put it. I just wait until there's money lying in the corner, and all I have to do is to go over there and pick it up. I do nothing in the meantime. As for our Shark Week specials, you can get Bloodhound and Blackbird with our indicator library and the strategy toolbox for $18.95. So if you've been sitting on the fence for a while, this is a great opportunity to dive into it. And for those of you who already have Bloodhound and Blackbird, we have a strategy toolbox launch special that includes the indicator library. As mentioned, 145 open source indicators with our toolbox materials for $590. You can use the lizardindicators.com/Shark Week link to register for that. And for our existing library members, we also have a launch rate at $3.95. Just log into the members section and follow the strategy toolbox to lock in that rate. As with our library, it is a one-time registration fee, so don't worry about any recurring costs there. So we'll have the event bundle up for the balance of this month, just like Shark Indicators. And we'll add more materials this fall and expect to make some adjustment to the pricing at that point. So head on over to our special here and get in at our launch rate. So with that, I'd like to hand it back over to Keith and open up the Q&A.
Cool, thanks, Chris. Yeah, I got a couple questions in here. Mark is asking, could you clarify, are these are pre-built strategies for Bloodhound or Blackbird? Like maybe template that you built?
Yes, so far we've focused mostly on Bloodhound, but there are a few Blackbird templates in there as well. But I just want to clarify that these are not turnkey systems, and you shouldn't expect anything ready to go. This is more the concept here is to speed up the process it takes to create your own systems. So these are ready to go templates that you can start working with and implement your own ideas for this. And personally, I don't really believe in guys that are out there selling strategies and systems and saying, well, this is 90% profitable and whatever, because that's that's not the way things works in these markets. They adapt way too fast, and once you publish any secret sauce, it will stop working very quickly. So I'd on one hand caution against that, and on the other, just clarify that these are teaching materials to make you independent and able to create your own trading style and own strategies. So it's a big time saver. That's that's the most short and efficient way of saying it, I think.
Yep, as they say, past performance is not indicative of future results. And yeah, a lot of people are looking for just like, hey, do it for me, hold my hand. I don't even, I'm just gonna close my eyes and let it trade, which might work for a little while, but every trader's different. Every trader has a different risk tolerance and style and psychological behaviors and everything. So even something that works really well for you might not work for someone else. Even if you hold their hand along the way. So it's actually really nice to see that you're on a similar page as us, which is providing tools for sort of learning the craft of trading yourself and making as efficient of a progress in that direction as you can. Ends up being
Yeah,
much more
there is
satisfying.
also a famous example, and this was in the 80s, I think. It was the turtle traders, and if I remember correctly, they used the Donchian channel for a directional trading system, and they took on traders, and at some point published the whole uh, concept behind what they were doing. And by magic, a couple of weeks later, it stopped working, and they went out of business.
Oh
So
no.
there's a post on that on our Lizard Indicators blog. So if you're interested in getting a more in-depth discussion on that concept, then head on over and check that out. And of course, now with artificial intelligence, algos there out there to look for patterns and look for entries, and so basically, if anything is published, then it's much easier for them to see it and to see the pattern, to see the entries, to see where the stops are, et cetera, et cetera. And so it's a little bit far-fetched and unrealistic to think that you can buy a turnkey system and become a profitable trader. It just doesn't work like that.
Without at least learning and adapting it heavily
Yep,
to your
exactly.
situation, your style.
Yep,
Yep.
exactly. You can get something and then add to it for your time frame, for with your filters or whatever. But you have to make it your own. You can't just expect to get something and then it will start printing money for you. That's a little bit unrealistic, I think.
Ricardo's asking if you could go back and show just so it's on screen the prices. Yeah, I noticed that's
Sure.
actually a pretty good deal if you compare it to especially our regular prices. So, as you can tell, LizardTrader is an official vendor for Shark Indicators. So you can buy from us, but he's allowed to sell it as well. And as you can see, if you're already planning on buying our stuff, this could be a way to get in at 18.95. That's already, because we're on sale too, that's already $100 cheaper than our regular prices. And you're getting his, are you getting the entire indicator library as well, like the
Yeah,
145?
yeah, we've made a real special with this because we want to share this material with people. Have had a lot of discussions with clients throughout the years, and even people that are experienced, in my mind, but somehow missing a step in the verification of a setup. And so I think this will be a benefit for a lot of people. And I think there is the strength in just keeping it open source as well for the platform. The more users that share and develop, the stronger the platform will be. And so that's sort of our open source philosophy as well behind this.
And to give folks kind of an idea of LizardTrader has been part of our ecosystem for such a long time. Anyone who's new to us, you might not know, we host a weekly workshop, except for this week, obviously, but Thursdays and Fridays, where you can come in and say, hey, how do I build this complex thing in Bloodhound? And Zach will show you. And we normally, to not exclude people who don't have certain premium indicators, we don't deal with third-party indicators except for LizardTrader. LizardTrader is I believe the literal only exception. And if I do a Control F and search for AMA, which is the prefix for your indicators here, you can see quite a few times Zach has covered that because your collection of indicators are so useful for such a wide variety of trade system development or fleshing out ideas. AMA
Yeah,
better volume, high-low activator, ADX VMA indicator, opening range indicator, Ichimoku. I mean, better
yeah.
volume. Yeah, it's such a common question. Zach has made an exception, which is I think a pretty big compliment because he is real stickler about that. So
Yeah.
that gives me the confidence to talk about you guys, and the prices you charge for your indicators are criminally low. So I think it's
Yeah,
so cool.
yeah. Well, thanks for that. And like I said, the idea is that a lot of this is open source, and so if you need to modify and you know how to program, you can do that, and you can experiment a little bit with that. And then if you want to take the next step with some of the library indicators, we have developed premium versions of those as well. And I think the most uh, discussed and best known are the VDAP suite or the session tool suite. So that's the opening range and the VVAPs pivots. And now lately the range projections as well, in addition to the Ichimoku indicator. And then it's a little bit more advanced in the premium suite, but again, focus on how to apply this in a system trading uh, environment and try to avoid that the customer or the client has to do roundabout thinking when it comes to the start of the regular session or the full session, or when an entry signal is plotting and when it's not. And so that's why we also have this premium suite where we have our proprietary indicators.
Well, good. Yeah, we've got a few other Q&A questions. See, Michael just made a comment, says, I have the Lizard library and 4 of the premium indicators, and he gives them the highest recommendation. So that's very big compliment there. Um,
Yeah, thanks for that. Appreciate it.
Les is asking, when using Bloodhound and Blackbird for backtesting or it says walk forward optimization, do Bloodhound and Blackbird assume the entries only occur at the close or open of the candle, or can they backtest using interbar entries? So when you're actually using the term backtesting, you're actually using NinjaTrader's backtest engine. So Blackbird is a strategy component in NinjaTrader, and so it has all the same benefits and drawbacks. And one of the drawbacks of doing a quick backtest is the term that I use for it, is that it does mostly only deal with the close result of the bars. And so NinjaTrader technically sticks the entries, at least for the quick backtest, on the open of the next bar. And so
So the
yes, it is,
market
yeah,
entries.
market entry, yeah. Or yeah, the entry price, the entry level of the given bar of the next bar. And
Right.
so most bar types and many trader styles, it works very well as a benchmarking tool to say, okay, I know that these results are not 100%, tick for tick accurate. Doesn't consider slippage, bid and ask data, things like that. But it can be used as a benchmark to say, okay, I got results, I make a change, I compare the results to each other and see, am I moving in the right direction? So a lot of new system builders will go through that process where they're developing their idea over time, over numerous tests, and say, okay, I've moved in the right direction very thoroughly. I like what I'm looking at. Now I'm going to take that idea into a much more thorough testing environment, which is using NinjaTrader's playback connection, is a very common way to do that, where it does behave much more like live data. And importantly, for certain trade styles, is intrabar. So if you rely heavily on taking trade actions based on intrabar behaviors, then the playback connection is going to give you a much better view and much more accurate way of testing. Chris, would you agree with that sentiment there?
Yeah, I think so. That's fairly accurate. I basically always use just the on bar calculate on bar close as a starting point. And if there seems to be something there, the order type will be part of my optimization process, if you will. And I will look for limit orders for retracements or pullbacks to see if I can improve. If you're going to miss some signals for that, of course, but then that's the trade-off that you have to figure out what makes sense. Just get into the market as soon as you have your entry signal, or are you willing to see, okay, I can make a better uh, trade-off by waiting for the limit order to fill, and then for breakouts, you can have stop entry orders uh, to also improve your your signals. So that's definitely something to consider having that as a part of your optimization process.
Yeah, and
So
backtesting Blackbird still supports limit orders, so you can still target that fill. It's just the entry point, that decision point of submitting the ATM in the first place is on bar close. So if that's sufficient for your style of trading, which for you, Chris, it sounds like it is, then it's a great way to test. Still supports trailing actions like your stop loss, action rules, and things like that, that many other ATM type tools don't include in that. So, okay, so let's take a look. Can you see the chat? I see Mark Owens is asking, does LizardIndicators offer a great consolidation filter? He has some strategies that perform well, but any profit I make is lost when it overtrades during consolidation.
so by consolidation, I'm thinking sideways. Is that what you mean?
Sounds like it. He says, I'm familiar with the ADX, so he probably is talking about that. Yeah, he says yes. But there are a few issues with it, like the ADX, it gets into trades after consolidation started and enters late after consolidation ends. So he says, I know the settings can be adjusted, but it doesn't seem to work. Yeah, the ADX is a pretty simple indicator that's useful for some filtering, but do you have something that works well for that?
Our latest addition to the premium suite is the range projections, and so that looks at the average noise over by default. We've set it to 4 weeks, so you have a little bit of a look back period there, but you can by being aware of those noise levels, if you will, you know whether you are in a sideways moving scenario, if you're within the noise bands, and if you break outside the noise bands, you know that there are most likely institutional traders that are pushing the market one way or the other. And so that's something that I've been working a lot with lately. So I'd suggest you take a look at that.
Yeah, what's it called?
Range projection suite. Range projection suite.
Projection suite. I'll have to
Yeah.
start recommending that people look at that because I get I do a lot of like new user demo sessions for trial users just to discuss goals, and a lot of people are stumped on how to effectively filter out signals during chop and stuff like that. A lot of people just end up using like a high period SMA or an ADX, but it sounds like from your description that sounds like a much more effective way to do it. Sounds pretty cool.
Yeah, the problem, I mean, it's you're always looking at past data, right?
Yes.
Also with the ADX or whatever the old traditional trending sideways indicators. The main issue that I had with those is seasonality, intra-session seasonality. So if you have an ADX and I don't know, you set it to 32 or whichever number, and you're on a 5-minute chart, or you have a look back period into a period of the day where there was, let's say you're trading the US session, right? And then that quiet time compared to the US Open and cash session, it's a lot of times misleading. So that's the main issue that I had with those types of indicators. And so the range projection suite is a one of our session tools. So you're able to compare apples to apples and oranges to oranges and look at the average daily noise levels during the regular session, compare that to the other regular sessions, and not mix other trading sessions into your trading window consideration. So that's the main benefit, I think, of that.
And Chris, do you have could you get the Q&A window open? There's a few questions in there, it looks like.
Yeah, let's
It's
see.
under more if you're sharing your screen.
Yeah. So somebody's saying Excel spreadsheet trade by trade. Well, the toolbox it doesn't it basically tells you how to do it with the SharkIndicators and NinjaTrader tools, but we don't really have an Excel spreadsheet doing the analysis for you. But um, yeah, like I mentioned, artificial intelligence and these algos that are out there. I don't think I would really want to compare or to compete with those, but when it comes to analysis, I think you can use artificial intelligence quite efficiently with Excel spreadsheets, for example. So I think I would recommend you to ChatGPT or something like that to have a look at, for example, a walk forward test or a equity crossover. You can use some of those tools to create that fairly easily.
And in case
So
you didn't
Dimitri,
know, if you're running a standard backtest or optimization, in the results you can right click and export as Excel. I'm not sure if that's what you're doing, Ken, but I know some people do that to get the raw data from the results and then dig deeper.
right. Dimitri, you were asking if you get all indicators for $590. So, like I said, we have two indicator suites, the library suite, which is open source, and the premium suite, which is proprietary. The indicators that are included in this deal is the library, the open source indicators, and the toolbox. So just to be clear about that. The Ricardo, you're asking about modules and content for the strategy toolbox. So we have the premium section, which shows you how to use our premium tools with Bloodhound and Blackbird. And then we have also, we're adding some content for that section, how to use different trade setups of our premium tools. For now, we've mostly focused on the library toolbox, where we have follow-up on some of our blog posts and spotlight newsletter posts. And so if you go to that section, then you can see how a few of those indicators come together and create a trading setup. As I said, each post comes with a description of what we're discussing and a tutorial video, and then also download materials to get you a head start on the chart and in Bloodhound. All right. I think that was it for the Q&As. Is there a place for me I can drop in the link here? Should I do that
Yeah,
in
and in
the
chat, and make sure it's set
chat?
to go to everyone there.
Yeah.
While you do that, Marius in chat asked, will you do a detailed video on the steps you need to test and optimize the system?
Yeah, there is a detailed video on that in the membership section. This will sort of a little bit like a flyover. I don't want to overwhelm the guys that are just starting out with a rule-based approach. So I just showed you in a fast forward what the 5 steps are, and then I get into more detail in our membership section. It's not a huge thing that you have to. I think it's a video of about 20, 30 minutes or something like that, but it explains very thoroughly what you do with the 5 steps. And like I said, the main idea here is to tell you what's important, save you some time, and also give you some templates for you to play around with, and then develop your own workflow and systems and ideas and move on from there.
Dimitri asks, what is in the toolbox?
So we have, like I mentioned, the 2 sections. Let's see here. You have the library toolbox. And so these are based on prior posts. So we've been talking about the QQE and the super trend and the opening range breakout. This was the crossover that we went over today. And so basically this is where we show how to put together a few conditions to create the strategy. And in the premium toolbox, we have the premium indicators, tutorials on how to catch the data series, different ways of working with them. And as I said, we're also adding these types of setups, combining the premium indicators with full-fledged setups and suggestions on how to use them. And then, as I mentioned, you have for each post, you have a couple of bullet points, what this is all about, summary, the download section, and then background materials. These go then directly to the newsletter that we have. So we did a spotlight on the Arnold Legault moving average indicator, and we did one on the Chandler crawl stop. So here we've combined those 2 posts into a practical use case scenario and show you how you can improve crossover signals and then optimize your exits with the Chandler crawl stop.
Looks like Jeff owns both suites. Awesome.
Great.
Well, cool. Any last minute questions, guys? Appreciate your bringing in some good Q&A questions in here. We'll give it another few seconds. Otherwise, yeah, it's always a pleasure to have you in here, Chris. I think we're actually not positive, but I think this is our 10th Shark Week in a row, and you've been in a large handful of them because by popular demand, we asked in Discord what regular speaker people wanted back, and you were number 1. So appreciate that.
Right. Yeah, I really appreciate it. I do put quite a bit of time into preparing the presentation, so it's great to hear that feedback. Thanks a lot. And yeah, it's I hope it's been of value for you and the attendees here today. And if you have any questions, you can reach me via the contact form over at lizardindicators.com. Otherwise, drop me a line at info@lizardindicators.com.
Amazing. And another one that people were requesting come back for this year is Rob Mitchell, and he is coming up next tomorrow morning at, well, morning for me, noon Eastern time for his discussion on easy and actionable order flow analysis for day traders. So that should be good. One last question from Raju. He asks, is your strategy toolbox interactive?
We are interacting with our members, but it's not like a quiz scenario where you are asked if it's not a course, to put it that way. I didn't really want to do a course material because in my experience, people have so many different approaches to trading. So, I've put some work into the headlines, and then you can sort of figure out, is this a trend scenario? Is it a reversal scenario? Is it scalping? Is it crossover? And so on and so forth. And so you're supposed to fairly quickly find what you're looking for and then get to the material, watch a quick tutorial video, no more than 10-15 minutes, and then that will give you an idea how to achieve what you're trying to do. And then, of course, by request, we will look at developing concepts based on ideas. If that's something that you would like to share with us, that's something that we would definitely look at.
All right. Well, thanks, guys. It's always a pleasure to have you here, Chris. We are out of questions, looks like. So have a great night, and we'll see you tomorrow at noon if you're signed up for that talk. So if you're not sure, you can go back to the Shark Week website and just make sure because you can choose which talks to sign up for. So we'll see you at noon. Have a good night.
All right, take care. Bye-bye.